Last video I did a deep dive on Trump's tax proposals. Today, I'm going to do the same thing with the Harris tax plan, look at what policies are being proposed and who that would impact. Now, Harris largely agrees with the Biden 2025 budget proposal, which was put out back in March of 2024, with some tweaks and additions. So we actually have some concrete proposals to go through here, starting with the change in tax rates. As a reminder, these are the current tax brackets set to expire at the end of 2025. Assuming no changes to tax law before then, these are the rates that we'll revert back to in 2026. However, one thing that Biden had consistently said that Harris has maintained is that nobody making less than $400,000 per year would pay more in taxes. Now, we don't have proposed tax brackets, but Harris has concurred with Biden's original proposal to raise the highest marginal tax rate back to 39.6%, which is what it was pre-2018. So here's what that might look like. Single taxpayers making over $400,000 would move from the 35% tax bracket to the 39.6% bracket, and married taxpayers making over $450,000 would go from the 32% tax bracket to the 39.6% bracket. Unless they spread out the income ranges more, which is very possible. We didn't have the 37% tax bracket pre-2018, so it's possible that they just eliminate that entirely. And then I'm assuming the rest of the tax brackets would remain unchanged for everyone else. It's essentially going back to the old tax rates for anyone making over $400,000 per year, and then for anyone under that, extending the Trump tax cuts permanently. Harris has also proposed making changes to the capital gains tax rate. So here are the current capital gains tax brackets. Remember, this is the lower preferential tax rate that you pay on gains for investments that you held for longer than 1 year and unqualified dividends. So Biden initially proposed the top rate to be 39.6% for anyone making over $1 million per year. Harris is proposing that top rate be 28%, not 39.6%. So she's come down a little bit, which is actually what it was back in the late 80s and 90s. So it would look something like this, basically adding another tier to the capital gains tax brackets. Historically speaking, this is actually not the top capital gains rate that we've had. Back in the 1970s, the top rate was 35%. So Harris is proposing that top rate be made 28%, again, for anybody making over $1 million per year. So how many people would that actually impact? If we look at the most recent IRS filing data, which we have tax year 2021, we can see that there were about 875,000 returns roughly filed with income over $1 million, which is about 0.84% of all returns filed that year. So less than 1% of people. And then if we want to look at the number of people making over $400,000 per year, they don't have a bracket in this chart for that income threshold, but they do have over $200,000 and over $500,000. So you can see roughly, I don't know, maybe 3%, 2 to 3% of people make over $400,000 per year. Another proposed change relating to investments is expanding the net investment income tax. So currently this is a 3.8% additional tax on investment income. Interest, dividends, capital gains, passive investment income, if you're making over $200,000 per year if you're single, or $250,000 if you're married. Now, Harris is proposing two changes on this. Number one, increasing the net investment income tax rate from 3.8% to 5% for people making over $400,000 per year. Number two, apply the net investment income tax to pass through business income. So this would be income from an S corp, a partnership that you're actively involved in. Currently, the net investment income tax only applies to passive income. So it sounds like this would start applying to businesses that you're actively involved in, for those making over $400,000 per year at least. The other big tax proposal that has gotten a lot of attention and a lot of criticism is the tax on unrealized gains. Now, I did a full video breaking this down in detail, so go check that out if you want to hear my full thoughts. But in short, this is a 25% tax on unrealized gains for those with net worth, not income, net worth, over $100 million. Although this would apply to very few people, I just don't see this passing. I don't think this could get enough support in Congress. That's all I'll say about that. You can go watch my video if you want to see the full deep dive. But there is another area of the Harris tax plan that could subject unrealized investment gains to taxes. Historically, when you pass away, your heirs get a step up in basis on inherited assets. So let's say you have $3 million in an investment account and your cost basis is $2 million. If you sell that while you're still alive, you're going to pay taxes on $1 million in gains. But if your kids inherit that upon your passing, they get a step up in basis, meaning they inherit that, their cost basis becomes the fair value at the date of passing. So those gains never get taxed. Your heirs could sell them the next day and not pay any taxes at all. Well, this proposal changes that. Upon the transfer of an appreciated asset, whether that be as a gift or an inheritance, those capital gains built in are taxable on the donor tax return. But there would be a lifetime exemption of $5 million per person or $10 million per couple, meaning you could transfer up to that amount of unrealized gains tax-free. Which brings me to changes on the estate tax exemption. Back in August, Harris endorsed the American Housing and Economic Mobility Act of 2024. This was a bill put out by Senator Elizabeth Warren geared towards housing, with plans to pay for the housing proposals with an increase in estate taxes. And it proposes reducing the estate tax exemption from the current $13.6 million per person back down to $3.5 million per person, which is what it was back in 2009. And then instead of a flat 40% estate tax that we have now, it would be a tiered estate tax for those over the threshold. So between 3.5 and 13 million, it would be a 55% estate tax. Between 13 and 93 million, a 60% tax, and anything over 93 million would be a 65% estate tax. So big changes there. That would substantially increase the number of people who are subject to estate taxes. A few other noteworthy provisions. Number one is increasing the additional Medicare tax from 0.9% to 2.1%. So right now, if you make over $200,000 per year if you're single, or $250,000 if you're married, then you pay an additional Medicare tax of 0.9%, above the 1.45% that everybody else pays. So it would look something like this. It would essentially be adding another tier to the additional Medicare tax for people making over $400,000 per year. Harris has also said that she would exempt tip income from income tax, which is a proposal that Trump had also made. And I did a full video breakdown on that. So go check that out if you want to hear more. Another proposal that she's talked about quite a bit is expanding the child tax credit in two ways. Number one, increasing it from the current $2,000 per child per year to what it was back in 2021 under the American Rescue Plan, which was $3,000 per child. I think it's actually $3,600 if you're for children under the age of 6. And then above and beyond that, the second way she wants to change it is increasing that amount to $6,000 per year for the first year of a child's life. And remember, this is a tax credit, not a tax deduction. So this is a dollar for dollar reduction in your tax bill. So this would be a pretty big break for new parents. On a similar note of people going through life changes, Harris has repeatedly talked about this $25,000 down payment assistance for first-time homebuyers, for people who have paid their rent on time for the last 2 years. And I believe this would be a credit, so dollar for dollar reduction in your taxes. Now, something like this was actually done back in 2008 during the housing crisis then in order to stimulate demand. It was a $7,500 credit for first-time homebuyers, but the difference there is that it was required to be repaid over a period of 15 years. So it was essentially a 15-year interest-free loan from the government for down payment assistance. It does not sound like in the Harris proposal, it would need to be repaid. Now, I don't see a situation where this doesn't increase the demand for housing. So I really do think that the supply issue needs to get fixed in order to meet the demands of potentially these new first-time home buyers. Another proposal is to limit the amount of gains that could be rolled over in a 1031 exchange or a like-kind exchange. That limit would be $500,000 per year if you're single, or $1 million per year for a married couple. If you have no idea what I'm talking about, right now you can sell an investment property, and instead of paying tax on the gains there, you can buy a second property and roll the gains from that property, that first property, to the second property, thereby deferring the gains until you sell that second property. And you can actually keep doing that forever until you pass it down to your kids tax-free upon your passing. And this provision would limit the amount of gains that you could defer in a like-kind exchange to $500,000 per year for a single person, or $1 million per year for a married couple, which is still a decent amount for your typical person. Obviously, much more impactful for people that are doing this a lot, which is who it's targeting. One deduction that Harris is proposing geared towards small business owners is expanding the startup expense deduction limit. So right now, your first year of business, you can deduct $5,000 for startup expenses. Anything above and beyond that has to be amortized or expensed over a 15-year period. She is proposing increasing that amount to $50,000. Another change relating to businesses is increasing the corporate income tax rate from the flat 21% to a flat 28%. Now, pre-2018, before the Tax Cut and Jobs Act, it was a tiered system and the top rate was 35%. With the Trump tax cuts, that got moved to a flat 21%. Harris is proposing that get moved up to a flat 28%. And remember, this is specifically for C Corp. So if you have an S Corp or a partnership, this does not apply to you. Now, there are a bunch of other changes relating to business taxes that I'm not going to get into because I don't think they'll be of interest to anybody, like repealing the reduced tax rate on foreign derived intangible income. So I'm going to skip over that kind of stuff, but I think I hit all the big ones. I hope you found this helpful. Thanks for watching. See you next time.